What's up everyone, this is Tony with Journey Crypto, and today's video I'm going to be reviewing the crypto project DSLA protocol. So this is a protocol solving a problem right now. They're building massive utility. It's a fairly new project that has massive room for growth and definitely a lot of partnership potential as well. So before we get into this video, I appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified when I make new crypto videos. Alright guys, so before we get started, a quick disclaimer, this is a sponsored video, but I did invest in DSLA protocol before they reached out to me. I actually mentioned DSLA protocol on the channel already when we were exploring how to find good small cap hidden gems on CoinMarketCalendar. So it was one of the first projects there. I did point it out at the time. I actually bought in myself, and current price, I'm actually up around 5x. I'm continuing to hold because I see the potential here with major partnerships, building utility. The more this is actually used, the more the price of this token is going to grow as well, in my opinion. Keep in mind, this is not financial advice. I'm just doing a review of the project. You should always do your own research and make your own financial decisions. So jumping into DSLA protocol on the website here at stacktacult.com. They actually have a couple websites. I'm going to be going over some important blog posts as well. So right off the bat here, a hedge against infrastructure risk. So DSLA protocol adds native risk management and parametric insurance capabilities to your applications and networks. I know this sounds pretty complicated, but I'm going to break it down as well as possible to give you guys a better understanding. This is definitely a project with high potential in my opinion. So DSLA's solution, DSLA protocol is a risk management framework that enables developers and infrastructure operators to reduce their users' exposure to service delays, interruptions, and financial losses using self-executing service level agreements, bonus malus insurance policies, and crowd-funded liquidity pools. So flagship use cases here, this is very interesting, which is why I say there's massive potential for partnerships here. As you guys can see, flagship use cases, what the DSLA protocol core development team is working on. DSLA contracts enable proof of stake delegators to hedge against delegation risks, while incentivizing the QoS of third-party proof of stake validators and staking pool operators. They already have something going with Harmony One. They have Polkadot, Cosmos, Band Protocol, Elrond Network, eGold, Tezos, Avalanche, and Oasis on here as well. So another massive use case here, DSLA contracts enable digital art investors and cryptocurrency liquidity providers to hedge against impermanent loss in NFTs. Automated market makers, which is Uniswap, and other DeFi protocols plan support for this later this year. So as we all know, the major risk with providing liquidity on Uniswap is impermanent loss. So you are able to hedge against impermanent loss with the DSLA contract. So to break this down for you in simpler terms, the DSLA protocol can be used to reduce the financial losses of proof of stake delegators and DeFi users. Decentralized SLAs are peer-to-peer outsourcing contracts running on a blockchain network. They can store and release cryptocurrency based on the performance analytics of third-party services. Decentralized SLAs bring an extra layer of trust to the user-provider relationship by guaranteeing consistent returns for users and by incentivizing providers for speed, power, uptime, and more. So this is a project solving a problem, and the more this protocol is adopted, the more demand that's going to come to the DSLA token. Which I will go over the tokenomics and price of the DSLA token and talk about that near the end of this video. So we did get some facts down here. I'm going to quickly go over. Allows developers to reduce their users' exposure to service delays, interruptions, and financial losses by implementing decentralized service level agreements. Gives a peer-to-peer alternative to service level agreements, SLAs, on the blockchain. It's a decentralized alternative to SLA contracts. The company is planning to integrate DSLA token to multiple other blockchains, so it won't be limited to just ERC20. The coin will be bridged with other networks such as Cosmos, Polkadot, Harmony, Tezos, Avalanche, Oasis, Elrond Network, Chainlink, and Band Protocol, and I'm sure more to come after this. So as you can imagine, lots of partnerships out of this, a lot of exposure, a lot more adoption being able to be used on all of these different blockchain networks. DSLA protocol can be used to protect users from losses that associate with downtime issues and problems with connection and performance. So you may be wondering what utility the DSLA token has. So they do have token burns as the protocol is being used to execute agreements, process claims, etc. There is a total supply of 7 billion coins right now as well. So DSLA protocol platform is powered by the DSLA token. The token allows you to access the DSLA protocol service, publish decentralized SLAs, compensate users upon breached agreements, and reward providers upon honored agreements. So that is something that has a massive use case here. So this project is really barely getting started. They just launched the mainnet 1.0 and their first dApp as well. So you can actually find that dApp at dsla.network here, and you can connect your MetaMask and set up a decentralized service level agreement. So this will grow over time, and I will be going over some blog posts here just to show you guys what they have going so far and what other type of problems the DSLA protocol is solving. Alright guys, so DSLA protocol did launch their version 1 mainnet at the beginning of April. Bitcoin.com here covered it. So I do see a lot of utility coming from Uniswap, PancakeSwap, and SushiSwap right off the bat, but I do think a lot of other utilities are going to be growing from this as well, especially as they get onto other blockchains. So DSLA protocol has released the first version of its decentralized service level agreement protocol on the Ethereum Layer 1 blockchain. Layer 2 deployments on Harmony and Avalanche are also coming in the near future following the results of ongoing audits, which by the way, they got audited by 3 separate companies just to make sure everything checked out for the version 1 mainnet. So DSLA protocol version 1 introduces a series of in-house innovations, starting with risk prediction markets, enabling developers, users, and liquidity providers to trade risk with each other using decentralized service level agreements, reliability forecasts, SLA futures positions, a triple token design, SLA staking rewards to incentivize the creation of decentralized service level agreements, and the availability of subsequent reliability forecasts. So various utility coming out of this version 1 mainnet, and this is only the beginning, keep in mind. Native token burns every time a SLA is verified to ensure the long-term sustainability of DSLA protocol and utility of the DSLA token. So that's good, making DSLA deflationary. So as this evolves and is spreads out to other blockchains and is used more and more tokens will be burned as well. So like I stated in previous videos, supply and demand, as demand is growing, just because there's more and more use case coming out of this and more users using the protocol, while the supply is shrinking from token burns. This should mean the token price grows over time, but keep in mind this is dependent on the adoption of this protocol. So as they spread out to other blockchains, get partnerships, get more exchange listings, the protocol should be used more and more, meaning more token burns, while more use case is coming and the demand is growing. Definitely something I really like about this project. They know what they're doing with token utility, which is something a lot of projects actually lack. So another major problem here that DSLA protocol is looking to fix is the Uniswap rug pulls. As you guys know, this was a major problem throughout the summer. Everyone would add liquidity and someone in the project would just take all of the liquidity, not only making you lose the coin you invested in, but also the Ethereum you provided for liquidity. So DSLA protocol is looking to fix this. So adding AMM pool ownership agreements. Pool ownership agreements are a new type of DSLA contract that enables core development teams to build trust with their community. So by enforcing timely liquidity ownership requirements for the Uniswap pool and being held accountable when they don't meet these requirements. Until now, core development teams We're resorting to liquidity lock mechanisms to achieve a similar goal of being perceived as worthy of their community's trust. So how DSLA protocol is looking to fix this is by designing a DSLA contract. A core development team and their asset holders agree on sanctioning unhealthy liquidity management practices and on rewarding good practices for a set period of time. To activate an agreement, both parties need to put money where their mouth is by staking DSLA, USDC, or DAI to the DSLA contract liquidity pool. So something I recently talked about that caused a supply shock to Binance BNB and Ethereum ETH is that a massive amount of these coins were required for liquidity on these swap websites. So with DSLA being required for these liquidity pools in these DSLA contracts, I definitely see a massive supply shock coming to the DSLA token if this really is used on a mass scale. Again, it really depends on the adoption rate of this project and as it grows and expands to other blockchains. So another major problem the DSLA protocol is solving is impermanent loss on the PancakeSwap and Uniswap. So AMM and Risk, what is impermanent loss? So some of you may not know what this is if you haven't looked to provide liquidity on Uniswap yet, but it is a great way to earn some passive income from fees from traders on these swap websites. And this just adds an extra layer of security and incentivized rewards. So assuming you add liquidity to a 50-50 AMM pool, impermanent loss happens when the value of your LP tokens ends up being less than simply holding the underlying asset of your pool. In short, AMM impermanent loss is a byproduct of the volatility of your pool's assets. So this happens quite often. You'll provide liquidity with Ethereum and a smaller market cap cryptocurrency on Uniswap. Let's say the smaller cap cryptocurrency goes 20x. You're most likely to get more Ethereum back than you are of that coin, and it would have just been better if you held the underlying asset. So if the calculated impermanent loss stays within the threshold of the agreement, DSLA liquidity providers earn the right to claim a reward by depleting the coverage stake of AMM liquidity providers. So whenever an agreement is violated, AMM liquidity providers earn the right to claim a compensation by depleting the upfront commitment of DSLA liquidity providers. So already they're building lots of utility, having to use DSLA for the contract liquidity pool definitely is going to be taking a lot of DSLA out of circulation. So I do want to talk more about the DSLA price and token here. So on CoinMarketCap, currently at $111 million market cap, still pretty small. As you can imagine, the volume is only 2 million on the 24-hour. Only a max supply of 7 billion coins. Comparing that to Dogecoin today, which hit over 40 cents with over 128 billion coins. This only has 7 billion, is solving a problem and growing very rapidly with potential of new exchanges, new partnerships, just massive potential here in my opinion. So still under 2 cents. And as you guys can see, it did peak out over 2 cents here around the mainnet launch. Like I have said, most people buy the testnet and sell the mainnet. So the price of the DSLA coin, in my opinion, is greatly going to depend on the adoption rate of the DSLA protocol. So as we see the project branching out to other blockchains, introducing more decentralized service level agreements, and the more projects and people that are actually using this, the more DSLA that will be taken out of circulation for the liquidity pools to enable contracts, and the more DSLA that's going to be burned as well. So it's going to be very interesting to see how this plays out. I'm going to be buying the dips moving forward. I actually did get in fairly early here around 0.003, and I actually found it while doing a video on how to find hidden gems on CoinMarketCalendar. So while this is a much higher risk, smaller cap cryptocurrency that's fairly new, barely launching the mainnet 1.0, I like that they're focused on actually solving problems and not building a bunch of hype and FOMO based around nothing like a lot of newer projects are doing. Also having good tokenomics, token burns, and locking DSLA coins for liquidity and contracts just means there's going to be more and more demand for the token, which I really like as well. So lots of possibilities here with partnerships, bigger exchanges, since their biggest exchanges right now is Uniswap and KuCoin. definitely a coin I want to be holding long term and possibly buying future dips if there is any, and then staking and earning passive income on this. So I do recommend following them on their Twitter as well, and that's just at Stactical, which is the company behind the DSLA protocol. You can get updates here on new updates to the mainnet and different things that's going on with the project. I do recommend following their CEO as well. Very smart guy, solving problems in the crypto space, pushing mass adoption, all things I really like to see in a team for the project as well. So lots of great signs here for me. I'm definitely just going to be holding, but keep in mind, this is not financial advice. You should do your own research and make sure it's something you believe in, and of course, make your own financial decisions. So that's it for today's cryptocurrency project review. I hope you guys found it useful. Please let me know in the comments below what you think about the DSLA protocol and where it's headed, if it's going to be used on a mass scale. Again, this was a sponsored video, but I did pick up DSLA token before the team had even reached out to me. I like what this project is doing, actually solving problems and giving the token actual utility. If this does get picked up on a mass scale, I definitely see this as a very high potential coin in the cryptocurrency space. So again, thank you guys so much for watching, and I'll see you guys in tomorrow's video.